Morning, Avi.
Hey Andrew, how are you?
Not too bad. How are you?
All good, all good. Sorry for the inconvenience, rescheduled and all that, but
Nah, that's all right, man. That's all good.
here.
I'm the one that bailed on you last month, right? So,
All good. Cool. So, how you been? How's your trading been going? What's
um,
new?
I've taken a bit of a tiny step back. I had some family issues, so I actually was supposed to go to Vancouver, and I was the guy in the room that gave away the ticket.
Ah,
And
yes.
so, and believe me, that was a tough decision, right? So. But I had to go to Montreal. Just had to figure some things out, and just got some personal stuff going on, and decided it's probably the best thing that I get my head together in another part of my life, right? So there'll be other trips, and looking forward to the next one, hopefully, right? So hopefully soon. But I don't know if there's going to be too many more trips where everybody was there, right? I mean, you were there, Thor was there, Paris. I mean, all these guys um, that I really look up to. Um, I don't know if I'll be able to see everybody together one day, at the same time. So
We'll definitely do it again. Don't worry about that.
yeah,
It's just quite a big production to do it, so
yeah,
it's more like a once a year sort of thing.
yeah. Right.
Rather than,
I hear you. Yeah, yeah.
yeah.
So yeah, yeah. Sorry, I have taken a bit of a step back. I've been doing a bit of trading here and there. Yesterday, I took Meta on some options. Made a bit of money, not too much, but I was green on the day, and I did a couple of scalps the day before. I was green on the day, so it's going okay. I think psychologically, um, I'm getting better at um, with my patience and execution, and so step by step, right?
Yeah, yeah, one step at a time. You got it.
Yeah,
So nice. Ooh.
but
Cool. We can have a look at some of the trades you've taken, but yeah, tell me what's kind of working and not working with you when you're
right.
trading.
Okay, so unfortunately, I can't really my technicals right now aren't the best. And when I say technicals, I'm not able to. I'm not trading off DAS on the options. I'm trading off trade zero, and I don't know how to. I haven't figured that out yet, and I'm just trying to figure out the life work balance, right? Um, I haven't figured out how to get my options chart. Um, how can I say this? So when I'm trading, like yesterday when I was trading the meta options, I'm actually using trade zero. And so, but I'm looking at the chart on DAS. Does that make sense? So I
Yeah.
don't know how to get that chart on trade zero, the option chart that is. I can see the meta chart, like the actual underlying asset, but not the
Mhm.
option chart.
Right. Now, do you need the options chart? Are you looking at price action on the options?
Um, no, I'm looking at the regular chart, but
Yeah,
um, I just don't know how to do it, Abby. I'm sorry. So
don't worry. I can show that to you right now, real quick.
have patience with me. I'd love to see actually how you do it on DAS.
No
Uh,
problem. I'm gonna share my screen right now and you can have a good look at it. Let me know if you're able to see my screen.
that looks like an airplane wing.
Yes, it is. Good. So you can see that. All right. DOS is going to pop up here in a moment. Just trying to open it. Oops. All right. Here it comes.
Well, Abby, what was the trade that you took on Monday? Was it Amazon that you took?
Monday. Oh boy. Monday
Was it
was a long
Monday?
time.
I was looking at
Yeah.
your Twitter feed and I didn't see it there, but you took a killer trade on Monday that I was watching.
Okay. Let me have a look. I can take a look at my Twitter and see what happened on Monday. Gosh, that was yesterday. What date was Monday? 22nd, I think.
Correct.
22nd. Oh yeah, one trade. No, it was multiple trades. Okay. It was Nvidia. That was the one that worked nicely. Took a 1 minute opening range breakout on Nvidia, basically as it broke the opening price and some pre-market resistance level. And actually that trade didn't work, as in it didn't go to my target, but I managed to make it profitable because I took partials when the momentum stalled,
Right.
and then got the rest out at break even. So yeah, well, the false breakout in the end, it turned out to be a false breakout.
Mm-hmm.
Yes, that was one.
And
The
maybe it was the trade on Tuesday. I can't.
Tuesday, Tuesday would have been the 23rd. Tuesday, 24th. No, that's not right. I don't think I traded 23rd then.
Pardon me?
20. I don't think I traded the Tuesday. I got Wednesday. Well, Wednesday was yesterday, right? Yeah. No. No, yesterday was Thursday. Wow, I'm all confused. Um, yeah, I've been trading the SPY this week. Maybe you're talking about last week when I was trading regular equities, well, options on equities.
I can't remember. Anyway, I thought maybe it was Nvidia.
Yeah,
Maybe it
Nvidia
was.
was the one trade I took this week. If you're talking about Amazon, I think I did take. Yeah, I took Amazon, but that was Friday last week.
Okay, maybe that was the trade. I
Yeah.
think that one trade worked out really well for you.
Yes, yes, that was, yes, you're right. Amazon,
A
that
lot of your
one
trades
did.
worked out really well for you, but this one stood out for me. I don't know.
Yeah, this one, it worked here. I'll pull it up on the screen. This is the one I think you're talking about. Where it dropped off of the open, dropped through the previous day's close and hit the target. So that's me getting short, buying the put options and exiting basically at the target. Yeah, that one worked nicely.
So on that on your screen, Abby, you've got the put option chart.
Yep.
Are you able to show me in DAS how to because I'm gonna throw in
Yeah.
some funds into DAS and start trading options with DAS versus with Trade Zero.
Sure, yeah.
If you can show me how you do that, that'd be great.
So this is DOS the way I use it at the moment. And move this thing out of the way so I don't really use this part. All right, so this is the options chain right here. Do you know how to pull this up?
Yes. No, I don't actually.
Okay, so you go up here to quotes.
Do you want me to do this with you right now while I'm
Sure, yeah, you can. Sure, if
okay,
you'd like to.
so okay, quotes.
So quotes and just click on option chain. That should pull it up.
Yeah.
All right, and then in the top left up here, you can type in the ticker that you want to look at.
Okay, so I'll put in SPY since that's everybody's favorite these days with the zero DTEs.
Well, I don't know. I'm doing it. I don't know if it's a good idea to do it, but um, so yeah, SPY, and then you got the options chains. You got the calls and the puts. That's it.
Right. So right now I'm showing
Well, the options aren't active when the market's closed, so you're not going to see any action here. But if you double click on any of these options, like right here, it should populate that in your montage.
I see. Perfect. Okay, that's great. Um,
That yeah.
now it's hard for me to show you. I'm gonna just take my computer. How can you see this, Abby? You see my screen?
Yeah, I can see it. It's yeah, I can see it.
So how can I configure this similar to yours? You've got
The only thing I've done different is if you look at mine, I just right click anywhere and go to config, and I've just changed the size of the fonts, just made it bigger. That's the only thing I've done.
right. Okay, I'll play around with that.
Yeah, just
And I'm just going to, well, this this session's being recorded, so I'll take a look at your setup here and configure it the same way. This is cool. I like this.
cool. Yeah. Now see this configuration I'm showing you right now. I just started this about 2 days or 3 days ago because
Okay.
now all I'm doing is trading the SPY. I'm not really looking at any other tickers anymore. So I've changed it around so it can so it works with what I want to do. So I
Really?
got the
You're not looking at the large caps? You're Just
No, I've changed my style. And so now I think it's been what, 2 or 3 days. I've just been trading the SPY and zero DTE options. And it's been a fun ride so far.
interesting. Okay, cool.
Yeah, a different world. But I mean, you gotta basically, you gotta keep it as simple as you can. Right now, I've narrowed it down so it's like this, just one screen. This is all I'm using. I don't have anything on any other screens at all, except the chat room. That's about it.
Right. So you're
Yeah.
not using the bid ask, are you? You're just using the
No, I'm not actually at the moment with the SPY. I put it up like that, and the options
right.
chart is there. That's it. That's how I have it. I haven't been. It's only been a couple of days, so this will be refined.
Right.
The thing,
Okay.
I haven't been able to use the level 2 on the SPY because it's so noisy. There's orders everywhere, so I haven't configured the level 2 yet, like tier size perhaps and some things where
Hmm.
it's actually usable for me. So I'm gonna keep refining it. Just the last 2 or 3 days, this is how it's been though.
Right. I did take a spy trade. I think it was a couple weeks ago, and I think I mean I made 5 times my money in it was like 3 minutes. It's
Yeah.
insane, and the it's amazing the liquidity that you get out of the spy. I mean, it's incredible.
It is. It is. That's the reason I'm trading the SPY as well. It's the only reason I switched over.
Yeah, no leakage.
Yeah. Well, there's a couple of different things. One is liquidity. That's very good. And the other thing that I've discovered is the SPY is nowhere near as wild as a lot of these stocks are, especially right at the open. That first minute, those first 2 or 3 minutes, where all of those stocks can jump all over the place. The SPY is so much calmer,
Really?
and
Because
they're
I sorry
actually
to cut you off. I don't see that. Like I don't know. I guess I needed to have a little more experience, but I find it I haven't been that successful. Like I've got Ninja Trader, similar to what Thor has, and I can't seem to get consistent with SPY or with the NQ futures.
Yeah. You know what I've discovered with the SPY is a lot of times the opening volatility right at the open is something you really just want to stay away from. There's
Hmm.
not much you can do with it so far, what I've discovered. I mean, yeah, it can make some big 1 minute candles, but the truth is it's those 30-minute candles that you want to capture. So take a look at yesterday's action. It opened here and it made this real big range below 500, the big number. Finally, it broke out of 500 here and it retested and off it goes to the next area of liquidity, 504. And then with all the news aftermarket, it punched through 506, which was really 506 was quite significant resistance. And now it's just sitting up here above this area in the 2 days ago high area. Ideally, it opens up in here and it's strong above the high of 2 days ago. Then it's got a good run in it for 510 today.
Hmm.
So that's kind of the setup I'm looking at for now. So what I'm trying to say is it's these big moves here that you want to try and catch when you're trading the SPY. Like look at this one on this day. It opened here again in the 30-minute chart for an hour. It just sat in that area, telling you that it's weak off of what was pre-market high. And so sure enough, as soon as it dropped 506, which we saw 506 was significant, a significant level earlier, sure enough, it dropped. Its resistance here turns out to be resistance here, dropped, and that's the big move you want to catch. Into the middle of yesterday's range or the previous day's range. So I'm trying to avoid these opening sessions and then capture the bigger move, the trend for the day. And it doesn't trend every day, but on days that it does, it's really great. Like look at this one again. It dropped a little from the opening price. And you can see this as a big move if you're just so hyper focused on the 1 minute chart. This is massive. But the truth is, when it comes back up to where it opened, then it did the real move. This is the opening
So,
range. It's half a
so are you
day.
using a 30-minute ORB, Abby, or are you getting in before the 30-minute candle closes?
I'm using the 30-minute chart to gauge the ranges. So like, for example, here's the range and I see a range here, like this is the top, basically the open, here's the bottom. So I'm not really doing it in a way where I'm waiting for a 30-minute candle to close, but I'm using the 30-minute candles to help me define the levels that it's playing with. And then when the 1 minute chart or when the price action gets to the level, then I'm observing what does it want to do? Like this was the open, and this was where it resisted right here, this wick right here. And sure enough, when it came back up, it resisted again. But then it retested an area of interest that was interesting earlier and in the pre-market. And then it broke out. This resistance happens to also be pre-market high. When it finally broke out, I mean, look at this move.
Yeah.
If I sit and watch the 1 minute candles throughout this 2 or 3 hours, it's going to drive me nuts. So look at this. How many candles do you have here? Maybe 5 candles, 6 candles. There's not much to look at. In the 1 minute, this will be like 100 candles. So it's a lot to look at. So just keeping it simple. And using a 30-minute chart. The nice thing about 30-minute chart, it's a big time frame, so you can capture big moves. Also, it's not too big that it's irrelevant for day trading. Like I find the daily to be quite irrelevant, so I don't use it. And on the 30 also, you can identify levels that are relevant for the current price action. That's the beauty of it as well. So, keeping it slow and simple as compared to what you were looking at here, like on this Amazon one, which is just scalping the open right here. And going down, and then this thing, actually the big move would have been if it came back up and ran up towards 185. This is the move to catch. I actually think it went on this day, I don't remember, but I just scalped it for this for 3 minutes. And really, it's a tiny trade, it's a tiny move, it's a lot of nothing. It's a whole lot of effort, volatility and stressing out about the open for nothing. Really, a small move. The real money is over here. So, if you can capture those sorts of things, that's really powerful. So it's a mindset reset kind of thing. If you're so used to scalping right at the open with volatility and all that, it's going to be a little bit challenging to overcome that habit or that tendency, and then sit and wait for multiple 30-minute candles before you really catch a move.
So do you find that now that you're focusing on the zero DTEs that you're by the computer a little longer than you were as opposed to, taking the scalps on Nvidia and Amazon and the Metas of the world?
Yes, definitely I am. But there's an efficient way to do that. You gotta firstly identify the levels you're interested in. For example, 500. I was interested in that anyways before the market opened. So I knew that. So what I could do is set an alert so that, it'll buzz on my phone and let me know wherever I happen to be that, hey, the price is approaching 500 now. So I can show up at the computer when it's here and then start observing it, then actually turn on the computer and look at it and see what it's doing. So you can do it that way in a very efficient manner. So you don't have to just sit here and do nothing. You can go on with your day and do stuff and just open up your laptop when the price is at your level of interest. Makes it much simpler. And you know what? The best traders in the world, that's kind of what they do. They only take 2 trades a week, for example, around about that much, or even 1 trade a week. And those are $100,000 trades, and that's it. They don't need to do much else. So they're not sitting at the computer for the 3 hours waiting for it to set up. There's no point doing that. What'll happen there is most of the time you'll end up taking a trade you didn't plan to take, because you're just sitting there. It's almost out of boredom and out of FOMO and watching other people take trades that you end up taking something that is not your style.
Right.
So I'm kind of also moving in that direction. I'm trying to find a way to trade less, be in front of the screens a lot less, but take much bigger trades and let them run. So I'm kind of working on that at the moment, trying to evolve my trading.
Interesting. And how do you set these alerts to your phone, Avi?
There's so many different ways. The one simple one that I like to use is TradingView. It's a free website.
Yeah.
You can just simply set up the level. So I can show it to you right here.
Yeah, I use TradingView. I use it to keep an eye on some crypto stocks or crypto coins.
Yeah.
So you're using the free version there in TradingView.
Yeah, that's it. So this is TradingView right here. Let's say, what if I got the SPY here? If I'm interested, pre-market, it's up there right now. If I'm not interested in the 500 level, just hit the alert button, and it should pop up something there. Create alert.
Sorry, where's the alert button?
Right up here. You see it? Can you see where my cursor is? Control A.
I don't see a cursor. Oh,
You see this pop up here?
yeah.
So you got to click up here on alert.
Got it. Okay.
Pops up. Let's hit the price you want. So I want, let's say, I wanted to see it before it gets to 500. So let's say 499. As it gets crossing 499, it'll alert me once. and it'll send me a message saying SPY crossing 499. There we go. And just
Right.
create. There we go.
And so
It's
you can put in your phone number in the in that alert tab somewhere, or is it somewhere else that you would do that?
just put the TradingView app in your phone, and it's all synced up. The TradingView app will buzz
Got
on
it.
your
Got it.
phone.
Got it. Okay, perfect.
So that keeps it very simple. So you don't even have to show up at the pre-market, the open, nothing. Just go about your day. And when it goes there, when the price goes there, just make sure you get to a computer pretty quickly
Right.
and put on the options trade. That's really it. So it's a minimal effort, really.
I
And
like
it,
that style.
yeah, you know, the best traders in the world do this. And I'm trying to figure out how I can do that. So that's an experiment for me at the moment. Just trying to work on it.
Right. So since we're talking about the SPY, um, are we able to go back to the SPY and tell me what the rationale is for today's trade?
Yeah. So what's interesting, well, let's look at it this way. Yesterday, it opened up down in this area after a move down in the pre-market. Significant drop, found a nice bottom, and was a bullish day. And in the post-market, it popped up with all the earnings on, what was it, Microsoft, Google, and all of them. And so it really popped up and it broke through 506. That was an interesting one. And it stalled out at what was the high of 2 days ago. This level, a little above 507. This is a very important level because it's very recent. It was an absolute high. It tested it and it's been dropping. Now it's gone right back up to it.
Mm-hmm.
So what you can identify is here's a bottom and here's the top. It's at the top now. It could stay in the range or it could break out if there's a lot of bullish sentiment. My feel is that there is a lot of bullish sentiment based on the earnings reports last night with
Right.
what happened with Google and Microsoft, and I think even Snap, I don't know, all of them. Basically, everything was bullish with the price action. So whatever the reports were, whether it was negative, positive, don't matter. The point is the sentiment looks really bullish. And this post-market action is telling me that. So as we get closer to the open in the pre-market, I'm thinking this, if it truly is bullish sentiment in the pre-market, it should be sitting up here, ideally, a little above this high. And if it is, then my area of interest or my area of level of interest is taking a trade off of this high of a couple of days ago up towards 510. And I found 510 just zooming back when was it at 510 last? Well, there it is. I just zoomed out and I found, look at that. It was so precise. It popped down here, found support, went up. And that's it. Once it dropped 510, it just went all the way down, and now it's finally looking like it's going to go back up towards it.
Mm-hmm.
So I'm seeing it that way at the moment. Let's see what turns out. You got to let price action confirm everything.
So where would you put your alert today, Avi? Would you put it around 508?
You know what I would like to do? Based on what I'm seeing here, these ranges are pretty small. I'll probably watch the open. Might sit around 15 or 30 minutes and see what it wants to do, especially if it opens in this area. It might do something right away within the first 30 minutes, might find an entry in this area and go. But if it opens somewhere down here, for example, I may just put the alert, you know, closer to 506. As it starts crossing 506, I'll show up and see what it does if it really wants to push through 507.
Right.
So I kind of have that in mind, but I'm still not really doing the alerts thing. For now, I'm just sitting at the computer a lot because it's only been a couple of days that I'm doing this, so I'm trying to get the feel for it. You know what I don't want to do, ideally, is trade this area because it just went through it right now in the last 2 days and even last 3-4 days. Yeah, it's just been in this range right here. And I don't want to, I feel like whoever wanted to play in this area has already done it. If it goes back into it, it's likely to be a mess. And I don't have a good read on how smooth it could be going in and out of here. So in this area, I'm not likely to be so interested. Maybe a scalp, but I'm not really trying to scalp to something.
So you think that it's just going to be too choppy in that range?
I feel like it would be, especially at the open, you know. So the idea is to try to avoid the open and then see what transpires. Hey, you know, it may just open somewhere here and drop at the open. And the first 30 minutes, it might do an action where it drops to about 506, maybe 505, and then pop back up. that would be extremely bullish. Because what would
Right.
happen is it's gone down there, and because it went back up, it tells you that it found a whole lot of new buyers in this area. Plenty of new buyers. These are the strong hands that want to hold. They only buy when it's cheap, and it's cheap here, not here. So they bought, these are the guys who are going to hold it and push it up. If that happens and then it breaks through, that is very bullish. So you
Right.
got to wait for that to happen, which would be, let's say, the opening session, about 30 minutes or so, maybe the first hour. But let's see if it does all that. It did that yesterday. It sat there for about, what, 2 hours before it went up, and buyers were down here.
Right. So
Before
you'd
they
be
pushed.
looking at a pullback to the 505, maybe 506 area. It looks like there's some liquidity at 506, right?
Yeah, 506 is very interesting because as you zoom out a little, look at that. Very serious resistance, very precise resistance too.
Right.
And sure enough, when it did pop above 506, it dropped right away. And it retested and it dropped.
Mhm.
It's just a very serious area of resistance. What I would love to see is, because it was resistance, I want to see
See it
it
hold now
recover.
as support.
Yes, that's very bullish. And ideally, it drops below it and gets pushed up quickly. That gives me even more confirmation that there are buyers here supporting 506.
So in this scenario, Abby, let's say it dropped under 506. Now it's on your radar, and now it starts to go up a bit. Where would you take your entry? Would it be at the just below the 506 level?
Ideally, it would be up here above this high of 2 days ago.
Right.
What happens there is you get all the confirmation from here. You get buyers coming in at 505, you get the confirmation it's pushing through 506, holding 506 as support. And then the final confirmation is it is breaking out and holding this very recent high and using it now as support. It was resistance, it's become absolute support. Then it's got room to run. The only thing in the way might be some pre-market action. So might be a little careful around here in this 508 area, 508.50 or so.
Right.
That it really got a good room to run. And I mean, look at how it ran yesterday. It could well burst through 510 if there are more buyers, that push up above that. So it's
Right.
all based on sentiment at that point.
So today your target would be, let's say, the 510 area where that previous support was.
Yes, that's the next significant area of interest. You can see when it kind of, let's just zoom out a bit. As it came down, it gapped up from 510, found 510 as serious support, gapped up from that even. But then when it broke down, it was a serious breakdown. So
Right.
what was support turned into not even resistance, just a genuine breakout, and went. And now, after quite a while, it's coming right back to it. So I'm very curious to see what happens there. I'm likely to see that it's going to struggle there as it pushes it. It's going to hit its head on that. It might even, if it's going to be an intraday thing, it might stall there for an hour or two, maybe. And then closer to the close of day, it might push up a little bit.
Right.
It does
Still
that. But
lots.
it just go up and come right back to 508 and close in 508, 509 area after hitting 510. It could do that too.
Right. Still lots of meat on the bone there.
Plenty. This market's a gold mine, There's opportunities everywhere.
You made a quote, I think it was Monday or Tuesday, something about a gold miner.
Yeah.
That was pretty good. I can't remember what it was. Please repeat it.
You know what? I don't remember it either. Let me find it. It was on Twitter, I guess.
I think it was in the chat room. I didn't see it on Twitter. Well, maybe it was. I don't know.
Okay, let's see. I gotta start remembering what I type. Law of nature. No, not that stuff. Oh gosh. Let me see. Fearless trading. No, not that. It's yeah, trading provides exhilaration and profitability. That's one of them. Maybe it was in the chat room because I'm not seeing anything on
Yeah.
Twitter.
Yeah, I was in the chat room.
Yeah. Well, the one thing I always like to tell people is when people talk about FOMO and missing a move and all that, they want to throw 20 stocks on their screen just so they don't miss anything. Well, the truth is that's a scarcity mindset where you have this mentality, everything is scarce and you don't want to miss it. You want to grab it right away.
Right.
That's not the truth. The truth about the market is that it is an absolute gold mine where there's so much opportunity every minute. All you need to do is really watch one ticker. Like I'm just watching the SPY right now. That's about it. And I don't care that everything else is making massive moves. It doesn't bother me because I know I'm getting 10 different opportunities just on the SPY right here. Like you were just saying, there's plenty of meat on the bone here. So that is now using the abundance mindset. We're not chasing it because it may not be there very soon. You better take it while it's there. That scarcity. The abundance mindset is it's always there. Take it if and when you want to take it.
Right.
Now, you go in with that mindset, that alleviates a lot of FOMO. A lot. Then you kind of relax, you're not anxious about it. You can set those alerts and walk away. And if it buzzes, then you come to it. Otherwise, you don't trade on that day, come back next week, whatever. That's how the best traders in the world do it. They really just kind of wait and pick their moment, let the stock come to them. In the meantime, millions of traders have made and lost millions of dollars. And you've just been fishing. It's great. You don't need to bother.
Right. Avi, the your SPY chart, the screen that you have there. So each gray vertical bar, it represents one day. Is that correct?
The gray area is when the market's closed, post-market and pre-market. The white area,
Okay.
the market's open. Yeah.
How do you set that up, if you don't mind me asking?
Yeah, sure. You just go into right click here, figure, and grid settings. Let me see. I haven't used this in a while. Let's have a look. Day separator is one of them. Market open is one of them. Yeah, background color. Show a different color for pre and post market. Check that. And what color you want.
Okay, perfect.
That's it. Yeah, it's in the configurations.
Okay, great.
So it's fairly straightforward there.
Hmm.
Cool.
And so today, I guess ideally you'd be looking for a pullback and then a push through the this area right now, I guess, right?
Yeah, that's the idea.
Yeah.
Or it could just, and if it doesn't, it could just chop around all day, in which case it's not a day to trade. Just step
Yeah.
away from it.
Yeah.
So just watch it and see what happens.
So an entry for you would be above the, what is it, 507?
Yeah, the high here about it's now 507.25 or so, right about here. And I would be careful of this pre-market resistance.
Right.
I feel like that could be minor resistance, nothing too serious. Let me just put the line up there. So yeah, so up in this area, it could be a little troublesome. So if you're in a trade going long from here, maybe take 20-30% off here
Right.
and stop loss at break even. So now you've made a little money and you're risk free for the run. And if it actually is setting up for a breakout and retest and a good pattern up here, maybe add back in. Stop loss goes right below it. For a new break even, stop loss right below it. Add your shares back in and off you go.
Yeah, right. Very interesting. Very interesting.
Cool. Yeah. Yeah, there's many ways to do it. And I think the way that works is the way that's simple on your mind and on your emotions. And you don't have to fight it. You don't have to fight yourself. If for you it's a laid back pace, as in it just is you being you. So you can just do it without a battle, an internal emotional battle. So that's different for everybody. For some people, that is scalping. That's how they function. That's the pace at which they like to function quite naturally. For some people, it's much slower. They'd rather sit on the beach, let the alert go off, and then half an hour after the alert, they'll finally make their way home and then take a look and maybe take a trade. For some people, that's the right pace. And that's based on their personalities and the pace at which they like to function. So that's really critical. That's when trading becomes truly sustainable. When you have a style that is a reflection of your personality, then you can do it.
Right. Now you're more of a scalper, wouldn't you say?
I have been up to now,
Right.
only because of Andrew, I gotta say. He's just I've learned everything from him. Watching in the chat room and all that, and like, that's the way to do it. You got to do it that way. You got to be in and out within 5 minutes, and you're done for the day. And all that. Truth is, I'm missing all of these massive candles, and I find that I'm terribly stressed out when I'm trading the 1 minute stuff right at the open. I'm like, I can't sit still. It's too much. It's just driving me nuts. And I've been doing it for years. I figured, wait a minute, there's better ways to do this and even make more money and trade less. Less, I mean, be at the screens for a lot less time, even less than those 15 minutes that I'm there at the open. So I'm kind of exploring that mindset and seeing if that does work for me.
Right. Now when you're your equity trades, the Nvidias of the world, you're taking some pretty big size there, like sometimes 50 contracts and plus. Um, because of the way your style with the SPY right now, are you taking less size based on the because you're not really scalping it?
Well, actually, I'm taking the same kind of size.
Mhm.
So what that translates to is it should multiply the P&L because the trades are much bigger. Now, it's only been a couple of days I'm doing this, and I haven't yet captured one of these big ones. Like yesterday, I captured like from here up to here, something like that.
Right.
Only like half a candle, whereas the plan was to actually capture this. And on this day, I captured also just a tiny piece of this downtrend, like half a candle again. So I'm yet to actually execute it correctly, where I'm taking a short, buying like 500 put contracts and going down. That would be like a $50,000 kind of trade. So I haven't been able to execute that just yet, but that's what I'm working on. So size wise, though, you got to think about risk. So, if you're entering a short here, your stop loss is right there. And then what's the reward? It's about 5 to 1 or even 8 to 1 or something. And that's what really matters. You got to make sure that you have that risk to reward ratio in your favor. It has to be very, very, very asymmetric. And here's the fun part. I've been talking to a lot of people about this recently. You know, even if you have a strategy that is complete garbage and makes no sense, you're always buying at the highs and you're selling at the lows and you're doing stuff like that.
Welcome to my life.
There you go. Well, even if your strategy is something like that, if you control risk versus reward and it's asymmetric for you, you will still make money. Plenty. And the simple way to understand that is toss a coin, heads or tails. You have a 50-50 probability. Now, I'll guarantee you, I'll make a deal with you. If it's tails, you lose $1. If it's heads, you win $3. All right, so let's flip this coin 100 times. It's 50-50, heads and tails. Did you make money or did you lose money?
You made money.
There you go. And look at that strategy. It's just a coin toss. There's nothing to do with resistance, support, VWAP, nothing. It's just a coin toss.
Yeah,
50
risk management.
still make money. But the thing that overpowers a crappy strategy is the control of risk to reward. That was the guarantee that I gave you at the beginning of this exercise. You guarantee that when you lose one. And when you win better than 3. So massively asymmetric. Now, if you can guarantee that in your trading, then the strategy almost becomes irrelevant. Almost. You just need something very simple that tells you when to go long or when to go short. That's it. Doesn't have to be elaborate or complicated or anything. Like the strategy I'm using is just basically horizontal lines. I mean, there's not much else to it. That's my strategy. Support, resistance. If it's resistance, go short. If it's support, go long. That's it. That's my strategy. But I'm doing a very massive conscious effort into controlling risk versus reward. So even on the coin toss strategy, I would make money. And the 3 to 1 I'm talking about, that's a bare minimum when you're entering a position. You want to make it so that it has a lot of room to run. So you don't have to sit there and calculate every penny on the chart. Does it have a 3 to 1 risk reward? Now, if you're doing that, you're doing it wrong. Then you should not be taking the trade. Risk to reward means it should have massive room to run. For example, let's say in this case, the price is here and it's starting to break out of here. It's going long. I got 510 as a target. Let's say I enter right here, just above the level, and the stop loss is just below the level, right? It's just a tiny little room right there. And the trade goes up to here. The potential is that it goes up to here. That's giving me like, what, 20 to 1 or 10 to 1 or something massive.
Right.
That's all you need to look at. Just visualize it, eyeball it on the screen. You don't want to sit there and calculate, is it exactly 3 to 1? It's almost 3 to 1. Maybe I should take it now. 3 to 1 is the bare minimum, meaning the time you should take the trade is when it looks so obvious like this. It should just jump out of the screen at you. It's so obvious, it's got plenty of room to run. That's when you're doing asymmetry the right way. That's when you're controlling risk versus reward and really getting it to work in your favor. And so when you enter these kinds of trades where the potential is 5 to 1 or 10 to 1 or something big, What'll happen is when it works, fantastic. It overpowers 8 or 10 losing trades. And when it doesn't work, no big deal. It's just $1 loss compared to the $10 or $20 win. What you'll find is 80% of the time, it'll go part way to your target and then drop back and stop you out. That's where you got to have a little more control. What you got to do is, as it goes, and it starts to struggle, it goes part way. It's gone part way. It's already at, let's say, 3-1 from your entry.
Take some off.
Exactly. Take some off. Take off even 50%. It's already 3-1, 5-1, whatever. It's gone a long way already, and it hasn't even hit your target yet. So you shouldn't have any trouble taking some off, pocket that money, take off 50% if you like, and stick the rest at break even. So if it comes back, you're risk free and you've made money. So even the trades that did not work, by did not work, I mean they did not go to your target, you still made money on it. That's the beauty of it. And that's actually what I was showing you a little earlier. Let me bring that up again, because that is really quite amazing how powerful that stuff is. Yeah, take a look at this one. Here we go. This is fun. This particular trade going long on NVIDIA, that's me going long. The target was 800. Getting long around here, about 780. Wanted to go to 800. That was my target. That's where I figured it's going to struggle, right? Big round number. So that was my target. So I entered right there. That's me getting long. Entered basically around about here with a stop loss very tight, somewhere here. So this was the risk area. And the reward was just out of the screen. It's so far away.
Right.
That was an obvious trade to me. It's so obvious. Like, if this works, it's fantastic. It's like 10-1 risk to reward, something massive.
So, sorry, where did you get in here? You got in at 780.
Somewhere here, yeah. So I got in at this when it broke this orange line. That's 782, somewhere there. And the risk was the opening price, this dark line here, right? Just below the opening price. So this was my risk area, right about here. And so, but with the target being off the charts.
Right.
It was massive risk to reward. You can risk $1,000 here to make 10,000, something like that.
I think this I struggle with a bit is identifying the targets and the setting my risk. I'm getting close to understanding it better. But can you show me some more examples of this, Avi, please?
Yeah, for sure. So on this one, the obvious target is 800. Nice big round number. And look, recently it struggled. It dropped down to about 800 and it bounced off. It struggled and it broke through. And it's a big number. So that's the obvious one. So setting that as a target, as soon as it gives it a breakout opportunity, which is this candle here, in my view, that's where I entered and going for the target. Now, it barely went up to about 1-1. 1-1 from my entry, as in my risk to reward, just about 1-1, I'd say. And it stalled. When it started stalling, that's when I started getting out. And it really stalled. It sat there for, I don't know, felt like forever. So that's why I got out, let's say, I don't know, 80% of my position or something. And I hit the button to put the rest at break even.
Right.
And so as it came back down, it just stopped out at break even. That's me getting stopped out. And so in the end, I only managed to realize about 1-1. So that turned out to be a $5,000 trade. If this really did go for that 10-1 or move, it would have been 10 times this much. So that's where the power of risk to reward comes in. So you only enter trades that give you a massive risk to reward opportunity, and then you watch it after you enter. If it looks like it doesn't want to go, especially when you're trading right at the open when there's momentum, if the momentum stalls, you got to start getting it out. And the beauty is that that point when you're getting out, it's already quite profitable, just because you've set up that redundancy by giving yourself this massive risk to reward opportunity. Those are the ones to enter. Do not enter any other trades. Just enter only when it offers you that. And this should really slow down your trading tremendously. You'll be taking a lot less trades. See, there's no way I would be interested in a short in this area, because look, it's just going to go down here and hit these levels, and it's just a messy area. But over here, look at the room to run. Massive. 800 is the obvious one. If it goes beyond that, boom, it goes. It's fantastic. So that's the way to use risk to reward. Okay,
so I'm looking at that example and I'm trying to, you said you want to take a short, but isn't like getting in at 780 for a target of 760, wouldn't that be, that's a $20 move, is it not?
Yeah, well, can you control it? Let's say you're getting short here, just below this dark line.
Oh, I understand for the risk reward. Um,
You see,
right.
if you're reading the 1 minute charts, yeah, it's a massive move. Right. Now, can you enter right here or right here with a tiny stop loss right here and get that 5 to 1, 10 to 1 trade? If you can do that, read the 1 minute chart really fast and put in really precise and tight stop losses, yeah, you're right, yes. What I'm trying to do is go slower and look at this 30-minute candlestick chart. This is what I don't know, $100 move it feels like. Let's say 850-ish down to almost $100, man. Now take 1,000 shares for $100. How much is that? It's not bad.
Yeah.
Well, that's the way to trade. That's the way I'm trying to trade, moving in that direction. And it's much, much slower, much, much bigger moves. And it's a lot more laid back. You kind of set the trade and come back and check on it later. Be in the chat room, talk to people, do stuff, go do other stuff with your day. Trading almost as a part-time kind of thing. So
So
let's
when
get
you
some.
enter in that scenario, Avi, would you
Sorry, go ahead.
once the trade's going your way, do you just set your stops and go off the screens?
Yeah, there was a time actually, I think 2 years ago, and I used to trade like that on the 60-minute chart. I used to just enter and set the stops and go away. Scalping the open, no, I don't do that. You can't do that because you got to read momentum.
Right.
But once you get into like this area later in the day, you can do that. If you're entering, let's say, breakout of this level down here, you enter a short, put the stop up there, then you just set your orders. You set 800, you might want to get 70% out over there or 80% out because that's your target. And anything after that is a bonus. And you just set them up at every $10 increment. So 790, 780, 770 as it hits. You'll start taking orders off and whatever's left, just take it off at the close. You can
Now,
set this.
can you do range orders, like have a stop in place, but also a target as well?
Yes, yes. OCO range orders. Yep. They're all there in DOS. It's very, very, very easy to do that. You
Would you
can
be
do
able to
that.
show me how to do that if you don't mind?
Yeah, sure, sure. So yeah, I got DOS over here. Range orders. So when you have a position on, you just hit the P button. So whatever position you have will populate in here. Then you hit this drop down menu and you hit stop. So you're getting a stop order. Stop type underneath there. You click on range market.
Mhm.
Right? Then what's the low of the range? What's the high of the range? So if you're in a long position, you put the stop loss where you want it to be, and you put the target where you want it to be, and it'll put it up on the charts for you.
Okay.
And yeah, that's it. Your full position, or you can do half your position, and the other half of the position, put another different range order for a different target price. You can do it
Okay.
all. There's so many different ways, but make sure it's range market. That way, when it does trigger, it'll be a market order that goes out. So you immediately get filled. You don't have to wait,
One
limit order.
cancels the other.
Yeah, yeah. This is basically an OCO order. Stop range is a one cancel the other.
Okay.
I used to use this a lot. I should probably use this more now.
Mhm. I see how Thor will use the 50 EMA on the NQs and ES. You don't use the moving averages at all, do you?
No, I don't. Not anymore. For me, they just get in my way.
Right. So just horizontal support
Yeah,
resistance.
levels of liquidity and yeah, horizontal lines. Candles and volume are really the most important thing, which is basically reading the tape. And yeah, the order book. That's for me is the simple way to get the majority of the results I'm looking for.
Right. Can you elaborate on that? Like the price action and the candles. I don't have enough confidence in there yet to read the price action.
Let's do it this way. Let's go into another example. AMD. All right, look at this one. So on the 30-minute chart, you can see the previous day was just weak, basically. Open there, closed there, it had a high up there, low down there. After the market closed, it was weak again, going down to the low of day. That was the post market. Then the pre-market, it actually gapped up above the close. Now that's interesting. Just on the gap up, it's telling me, okay, it's done selling, done with the weakness, and it gapped up above the closing price. That's a very significant level. So I'm thinking this could be strong.
Mm-hmm.
Sure enough, in the pre-market, it is strong. Found a resistance line. So I put a line there, 149, 150 is an obvious one. 149. And it came right back down to what I considered really serious support. Yesterday's close, and that's where it got from. And sure enough, it is serious support in the pre-market. It pushed right back up. Now, when it's about to open, it's opening in between the resistance and the support, right in the middle of this area, right? Which happens to be an area of interest on the previous day as well. Could be interesting. It could be that this is a support area for the next push up towards the resistance area. Could be. Overall, though, I'm thinking this is the range. And in the middle of the range, there's something going on. But let's have a look. So it opens. First candle, bullish with good volume. But there is a decent wick on the top side. So it's telling me, okay, that 149 that we identified as resistance, it's close to that. And it's struggling a bit right there. So let's be a little careful with this one. Next candle, very bullish, right up off of VWAP, starts to go. Lots of momentum coming in. This is a very bullish signal. 1 minute ORB kind of setup taking place. But it's not a perfect setup because of this wick. That's the key point there. You got to be careful.
Right.
You know there's sellers here, and you already pre-identified 149 as a potential resistance area. Me, with the aggressive way I take things, I got involved. Got involved right about, I don't know, somewhere in this area, stop loss right below the candle, anticipating a breakout. Sure enough, the candle starts to go, but it struggles. It's sitting here for like 30 seconds, not able to go anywhere.
Yeah.
And I'm watching this momentum not going, and I know this is where it struggled just a minute ago, and it's struggling again. So I'm like, you know what? That's too much trouble. This is a resistance area right here. That's me exiting the trade. Because I'm not confident. After this thing struggles on momentum, I'm just not confident of that breakout idea that I had.
So were you using the level 2 in that scenario, or just time and sales?
At this point in time, it's too fast for me to take a look over here. Looking at the time and sales level 2, it's just too fast in the second minute. I can't do it.
Right.
So usually after 2 or 3 minutes, that's when I can start looking at it. Now, definitely look at it in the pre-market. I've done plenty of that, where if I'm seeing lots of sellers at 149, then okay, I know that's very serious resistance. You can identify that a few minutes before the open, and you can see them just sitting there on the level 2. But right here, when things are moving rapidly, you don't want your eyes to be distracted looking at this stuff. You got to be hyper-focused right here.
Right. So you're looking at the candles only.
Pretty much. The candles and the momentum of the candles. I'm trying to read the pace at which it wants to go. It's like a football game, offense, defense. Who's winning? Who's in charge? Who's got control of the game? So you're always watching that. So here I had the idea that one side is winning. That's the bulls, the buyers. But very soon, this is the defensive line of the sellers. They're not letting this budge. They're very strong. That defensive line is very, very strong. That's where I'm like, all right, I've had enough of this. I'm not confident anymore. So got out of it. And sure enough, the next minute, the bears did take over, dropped it. Nice big red candle with tremendous volume, bigger than the previous one.
Right.
And a little bit of a consolidation there on low volume. So it's telling me the bulls are just not there today. And sure enough, boom, dropped the opening price, which held as support. Dropped it, retested it, unable to break up. So the bulls are really not in charge. Sure enough, that wick is confirming. That wick is confirming even more. I mean, you could take a short in this area with stop loss right above the opening price and run this thing down back to what was support, the previous day's close right there. That's how I would read this.
On that 1, 2, 3, on the fifth candle, the big red candle there, could that have been a short at the 148.2 line? I see you got a level drawn there.
Yeah, that is the opening price. The chart
Opening price,
automatically calls that for me. So that's not drawn before the market opens. As the
So-
market opens, that's drawn.
Right. Got it. And so would the stop loss be to for the risk management of the trade to have a stop at 148.60? Would that be a decent area to put a stop where it was the high of the previous green candle? Would that
Well,
give a
you got to understand there's a lot of risk in this candle. Even though the prior couple of candles were telling you that it's bearish, but it's still not confirming you where you should put your stop. Really, the obvious line is here, because this was support. Now you wanted to confirm that it's resistance, which this is the one that truly confirms it. And this one actually was really powerful. Actually, at the end of this candle, I might just take a short right in this area and stop right there. Now, so what you want to do is wait. And the best way to do these things is you can identify this as a range. This is your opening range. This is the breakout of the opening range. Comes back to retest the opening range. Once you're confirmed with the retest, and you're sure that this line is holding, then you want to take an entry below the line as close as possible to the line, somewhere in here or in here, and your stop loss just above. Give it a little bit of room. Ideally, you're able to have enough patience to wait for this candle to go up, reject almost precisely. And as it starts coming down, that's your entry right about there. Stop loss just above, and you're running this thing down. Your first area to expect some support is here, because that's where it found support just a few minutes ago. So you can expect if it's troublesome here, if it's losing momentum here, that's when you take some off, maybe 10%, 20%, stick the rest at break even and let it run down to
Right. So that's like almost 4-to-1, 5-to-1 right there.
Exactly. And here's the fun part. You're entering about here, 148, going down to 146.50 with a tiny stop loss, massive asymmetry, which enables you to take partials if you're losing momentum, which you can expect momentum to die out over here a little bit. And when you take those partials, if it comes back and stops you at break even, it's no big deal. You've still made money because your partials here are already at like 2-to-1.
Right.
So that's the beauty of asymmetry. When you really only exclusively take trades with massive asymmetry, the truth is your trading strategy almost becomes irrelevant because the asymmetry overpowers it. Even the trades that don't work out, like if this one just came down to this level and bounced back up, it didn't work. It didn't go to your target, but you still made money. Like this one, look, it didn't work, but I still came out with something, well, $150 out of it.
Right. So if you had, let's say, 50 contracts in this scenario, how much would you take off when it hit these lower levels? Like when you hit 2-to-1, how much would you take off? Would it be based on a percentage, like 25%?
You see, when I'm in these momentum trades, and before it gets to my target, if momentum dies, I have a 10% button, and I can hit that 2 or 3 times and just take off that amount of percentage of my position. So if it's, let's say, 100 contracts, it takes off 10 contracts right away. And then you have 90 contracts left. So you hit that button again, it'll take off 9 contracts. Then you have 81 contracts left. So you hit that, it'll take off, what, 7 or 8 contracts.
Can you show me how you do that in DES, please?
Here are my hot buttons. Sell 10%, 25%, and sell all. That's it. These are the buttons that I use to exit positions. That's all there is. So when I'm getting involved, it's either I have these 2 buttons to get involved, buy 50 or buy 25. Hit them a couple of times if I want, more.
Right.
That's about it. Nice and easy.
How can I set that up? Do you have
you want the script? Yeah. So which buttons do you want?
All of them.
All right, sure. No worries. Here we have we're on Zoom here. Let me open up the chat and I'll type in the script for you right here. So to go long, I'm going to right click it, edit, and it's showing me the script right here. And you can see where it says share equals 25.
Yeah.
You can change that number to whatever you want. When you type in 25, it'll give you 25, position of 25. Either if what depends what's in your montage. If it's options, it'll give you 25 contracts. If it's a ticker, it'll give you 25 shares. Whatever's in your montage, it'll give you 25 of that. So if you change this to 100, it'll give you 100 of whatever's in your ticker. You'll be going long, you'll be buying. So I'm going to copy this and send it to you right now in the chat right here.
Perfect.
You've got that. So make sure though with these scripts, you put them in and test them out in the simulator before you put it in the live market.
Yeah.
You want to make it working with your montage and everything. Yeah. So that's it. So this other one, long 50 is the same script, just change the number. So I've got 2 of them there. That's all. Change it where it says.
If you have a range order, let's say you have a range order and something's going a little screwy with the market. If you press that sell 10% button, will that work even with the range order in place? Or do you have to cancel the range order and then take your...
That works.
Sorry?
It's fine. It works just fine.
Okay.
Wait a second. Yeah, it works just fine. You don't have to cancel it, but I recommend you test it as well. I haven't done that in a long time.
Right.
So I'm gonna give you this one, right click, edit. And here, this is, yeah, cancel all. All right, yeah, it works fine. Because what it says here is cancel all. That's the first thing. So it cancels all the orders that you currently have in place for that symbol, whatever the symbol is in your montage. So if you do have a range order in place, it'll cancel that range order and then take off 10% of your position. You see, it says your position 0.10.
Right.
That's 10.
And then that's going to completely cancel the range order. So you'd have to put back the range order afterwards.
Yeah. It'll cancel any order you have on that symbol, whether it's a stop loss or a limit order, or range order, whatever else you've got already in place. It'll just cancel it. It'll give you that 10% off. It'll take 10% off. And then you have whatever's left of your position size, you can do what you want with it. Put in new range orders if you like. Put in new stop orders, limit orders, whatever you want. Now here, where you can have this 0.10, it'll take off 10%. You just change that to 0.25, and then you get this hotkey, sells 25.
Yeah.
If you change that to 100, no, not 100, well, there's 25. So let me give you this, and I'll look at the sell all. That's a slightly different script, I believe. So copy paste this one to you. That's the sell one. So you just change that number there to whatever percentage you'd like.
Perfect.
Now the other one where you close the position. This one says, yeah, share equals position. It says POS, that means whatever position you've got left, it just sells it off. Just sells. That's it. So this one is where it sells everything. Sells 100% of what's left. Sells anything you've got left. So it's a slightly different script. It's just share equals POS position. And that's it. Simple enough. And I'll copy paste that to you as well. And if you're in a short position you want to cover, I don't really use that anymore, but those are there as well. So this
Why don't
one,
you use those? Sorry.
because I'm only just buying contracts these days. I'm going long puts. If I want to short a stock, I buy the
long puts. Yeah. Okay.
Exactly. So it's the same thing with the cover ones as well. Cancel everything that's on there already if you have any orders there, and it'll cover 25% of your position. That's it. Nice and simple.
But basically right now you're just buying calls and puts, right?
That's it. For now, that's all I'm doing. I do keep these in place because sometimes I get overexcited and I hit it too many times, like sell all or sell 25%. I accidentally end up short sometimes. There's a glitch sometimes, so I need to cover it right away. So just hit that button and cover it in case I end up short. That's why I have the position window here. It tells me if I'm long and short and how many shares I've got.
Right.
Or contracts. So that that becomes funny when I get overexcited and hit the button too many times. Bit of a safety thing. I just keep the buttons there. There you go. These scripts are really simple, really easy to use. There's nothing to it. Even these ones where it says long 1,000 shares, short 1,000, it's the same script as these ones. It's identical. I just labeled them so I know, okay, this one's with 1,000 typed into the script. This one's 25 typed into the script. And I just use the word contracts here, so I know I'm using this with options. If I'm trading shares, I'm using these buttons, which I never use anymore.
Right. This is great info. Thank you.
Sure. Yeah.
Okay, back to SPY. I was going to ask you, what would be, so SPY's trading at 507 right now.
Yeah.
Let's say it hangs around this this price point going into the open, and obviously we can't trade options before the market opens. What strike price would you take in this? Let's say you're looking at an entry at 5, for example. Let's say it's going up to 508 and change, that up to that level, and you want to take it long from there and then put your stop just below that level. Would you be looking at the 509 strike or the 510 strike?
Exactly. 509. I prefer to be just a little bit out of the money. I used to go with just my target price, but a little bit out of the money has one advantage I like is you're going to take advantage of the gamma in the options right away. As soon as it goes in your favor, it goes right through the strike price, which is when gamma accelerates the price. It goes away from you pretty quickly. You're already in the profit pretty quickly.
Right.
And then you offer it to your target for that reason. So that's one piece of it. And well, it's not really so much of an issue on the SPY, but with other tickers, you want to make sure you're out of the money a little bit, not too far, ideally, and there's liquidity in the option. And even on
Yes.
something like Nvidia, I've struggled with liquidity. Like to get 100 contracts on Nvidia has been a struggle at times. And even the hard part is, even if you happen to get it, if you need to stop out, that becomes dangerous. I've had many times when I've realized 3 times as much of a loss as I planned to, just because when I stop out, I couldn't stop out. There's not enough liquidity for me for the market to absorb my shares, my contracts when I want to get out.
Right.
But by the time I can get out, it's already gone so far away from my entry that I'm down more than 3 times what I plan to risk.
I
But
think
that's
I found that in I think it was Meta I was trading a couple of weeks ago, and the spread, it was very spready. I didn't like it at all. I think it was Meta. I'm not sure, but
yeah. And that's one of the primary reasons I've shifted over to trading the SPY at the moment. It's just because of liquidity. It was such a struggle for me for the last 6 months or so with upgrading my size. I've really run into this problem. So one solution is to go to a more liquid instrument, which is SPY at the moment. And so far, no real issues there, but futures seem to be where liquidity really is not a problem. So I'm
yeah,
exploring
right.
that.
I mean, typically you've got more than 30,000, 40,000 contracts. I mean, the slippage is very minimal, eh?
Yeah, it's far better. I'm enjoying this far more than trading options on the tickers.
Right. Interesting.
See
Okay,
that.
good. That's great. Let me see if I have any other questions here. And thank you. The technicals is or the setting up the DAS has been a bit of a challenge. So this is really good info. Thank you.
Good, no problem. And also for DAS, on our BBT YouTube channel, we've got a tremendous amount of videos on just using DAS, particular different hotkeys, complicated hotkeys, fixed risk stuff where you enter the position, it already sends your stop loss and your target orders into the market already. You just click one button and it does everything for you. There's all these different scripts. So we have so much content out there if you'd like to explore that. There's many different ways to use hotkeys: percentage of buying power, fixed risk, RVR, confirming RVR, OCO orders, all that stuff.
Mhm.
So you can explore that and get some ideas
Okay,
for sure.
cool.
Yeah.
All right. What else should we go over? Um,
Well, you were talking about the candles and really how this works. So we went through this example. Let's go into another one and see where we can find some. This particular one, quite simple, really. It was really bearish on this day, found a low over here, closed here. Post-market hung around the close. Pre-market, same thing as that AMD one, gapped up, found resistance right there in the pre-market, which happens to be the low of 2 days ago. It's off the charts right now. And then it opened up, it came down, opened up where it had found support, previous day's close. So you're thinking, okay, this is support, this is resistance. That's what you know for now. All right.
yeah.
But at the open, it opens just a little bit above support and it breaks down, breaks out of support very quickly. And what I was able to see, if I remember correctly, is it comes down within the candle, it pushes up once, twice, third time again, that's where I'm entering long, entering the puts long.
Yeah. Yeah.
Stop loss right above it, literally within the candle, and you're getting something like 8 to 1 right there. And this one did work. It did go to target. I ended up with about 8 to 1 or 6 to 1 or something. So
How's the liquidity with the option market in Amazon? Not bad.
it's the same as all these big tech stocks. It's not too much trouble at the open, but it dies pretty quickly. So really, I become restricted to just trading the first 15 minutes or so with the
No, I
contract.
I like the 30-minute because see, I struggle, and it's just I guess saddle time in front of the screen, with the levels. But looking at the 30-minute, it just gives you time I think more time to evaluate the trade. What did you say?
Absolutely. That's the beauty about it. It's so slow. And you can really do it at a laid back pace. You can quite literally lay back on your beach chair and just look at it while listening to music in the background. Think of it that way.
Mhm.
You don't want to be all frenetic about trading. Like this trading right here, this stuff, I found it very stressful. That's why my stamina, my capacity is only about 15 minutes of
Right.
doing it at pace. That's it. I'm burnt out after that. I can't think clearly anymore. I'm
So you're
done. I need
looking at the 1 minute chart.
yeah, the 1 minute and trying to engage with it with heavy size. Like this would have been, I don't know, 400 or 500 contracts. I don't know, maybe 300 something.
Right.
It's quite heavy. So, and then, these candles are moving. It looks like a nice smooth candle. It's not. When it opens there, then it transacts here, then another transaction here, then another one here. It's all over the place.
Right.
And in the middle of that, you're trying to identify, is it breaking out of what was very serious support right there? And is it retesting it? Is it confirming it? And then put on 300, 400 contracts on that? I mean, I get burnt out with this. I'm telling you, in 3 minutes, that's it. I'm sweating. I need to go take a shower. I need to go sit in the hot tub and cool off. Just it's wild. And I don't see how that's truly sustainable. Now, I did it for the last 6 months or so. I'm really glad I'm moving away from that because it burns me out. People do it, but I don't see how it's truly sustainable. And also, again, the bigger picture is you take this trade, okay, but look what you're missing. And this whole trade right here is this one candle. Look at that. You can have 5 candles like that. Wouldn't it be better to catch this while sitting on the beach? Right? That's the way to do it, I'd say. You can get bigger moves, you trade less, and you're less stressed out. You don't even have to take such a big size. You can even downsize it, especially in the beginning. Like
Right.
this is so easy where it comes down, it finds very serious support, and then it goes up and comes right back down to the support, which happens to be also support in the pre-market. So you can almost plan that this is a level. Sure enough, once it breaks out on the 30 minutes, starts to break out, then you switch over to the 1 minute chart and see what it's doing. On a 1 minute, it'll probably come down a bit, retest and go. It's an ABCD pattern, reverse ABCD probably. See, this is an ABCD pattern on a 30, and
Yeah.
within the candle, you'll probably see a 1 minute ABCD pattern. So I call that a fractal pattern. And you can enter that reverse ABCD and off you go. That's it. It's a pattern within a pattern, and it looks identical, and that's a fractal pattern. It makes it slow, and you have enough time to lay back and observe this stuff.
Very interesting. Okay.
Yep. So there's many ways to do it. You got to do it in a way that you can sustain it. You don't want to be burning yourself out and stressing out and doing stuff that you have to fight yourself internally when you're doing it. You don't want to fight yourself. You want to be clear-headed when you're doing this stuff. So
Right.
you should, it's a simple matter. So let's see what other opportunities. Oh yeah, you missed yeah, that was us in Vancouver. Missed the whole thing. What is this? No, that's the same one. Yeah, let's see what we've got here. Tesla. Okay, let's look at this one. 30-minute chart. It was a great big mess the previous day. Closed here, bounced off the close, but then broke the close in the pre-market and even broke out from the low of the previous day. This is very significant where it broke out and it retested the low. So this was very serious support. Now it's become very serious resistance. And you can see as it retested it, then it found support at the low of 2 days ago. It's off the chart.
What day was that, Abby?
The 15th of April, about a week ago, 2 weeks ago.
Mhm.
So what's interesting here in the pre-market is it broke what was serious support, confirmed that it's resistance, confirmed that this low of 2 days ago is support. And before the market opens, it goes right back and confirms the resistance again. So what I'm thinking is here's a resistance, here's support. I'd love to get a trade in this range going down. So what happens? It opens right there for a moment. It pops up into what is resistance. As it punches down, it confirms to me that, yep, this is pretty firm resistance. Definitely. But I'm not entering there because I got VWAP right there. If you're aggressive, you can enter here. I've taken trades here, but it's a little aggressive. Just wait for it to lose VWAP. So it closes just about at VWAP. Starts to go low below VWAP. That's my entry right there, first entry. And the stop loss is about halfway to that first candle. Give it a little room above VWAP. Target is down here. So this is really not a very good risk to reward trade. But what happens is it comes on this candle and retests VWAP and starts to go. So once it's confirming that VWAP is holding as a resistance, I'm further adding into my trades. So with low conviction, I didn't really get into full size up front. As I got more conviction, I added into full size. By the time I added, it was already close to the target, so that was a bit of a spread there. But the new stop loss is at VWAP. So now you can see with that initial entry, which was here, the stop loss is quite literally almost at the entry. Now this becomes like a 5-to-1 kind of trade.
Right.
Pretty quickly. And as it hits the target, I'm getting it out, and the rest gets out as it pulls back. I think that was break even, and I can't remember. So you can see this trade did work, but it wasn't a really high quality trade because of that RVR, the risk to reward. The target was so close. Now you can't plan the target to be way down here. I think it did go down to 165 on this day. But what you can plan is that it was proving to you that this is support. This was very serious support 2 days ago. It's the low of 2 days ago. And in the pre-market, it's telling me this is firm support. So you plan that target. Resistance, support. Now, if you got that entry up here with a stop loss right there, then you have a good one.
Yeah.
I was a little late and I was waiting for more confirmation. I was being a little hesitant on it. So I waited for more confirmation and then tightened the stop and tried to get into full size. But really, because of the low RVR, it didn't really yield much. It ended up being barely 1.5-to-1 or 2-to-1, something like that. Not a real trade, even though it worked. It was poor execution, really, just not good RVR. So this kind of trade, really, if it went against me and stopped me out, would have lost the equivalent of this, let's say 2 or 3 grand, somewhere there. That was the risk on it. So now if you trade like that, you're not going to make money. Long term, it's not sustainable. You might have 1 or 2 winners, but then the losers will eat you up right away.
Right.
Risk versus reward is incredibly important. So do not take a trade until you have absolute confirmation of that asymmetry in your favor. And that will overpower the strategy. I mean, that is incredibly powerful. Just remember the coin toss. You toss a coin. Your strategy is a coin toss. But you will make money on that. Even on a simple strategy that has no relevance. You'll still make money if you control your risk versus reward. Absolutely. Right. Let's look at this one. Fun. AMD, great big mess on this day. Closed here. The open price on this day was here. The low was here. The high was there. In the post-market, it was weak. It went right down to the low of the day. And it sat there. Pre-market gapped up, opened up, and it confirmed that the closing price of the previous day was support. Again, seriously important level. And it confirmed that resistance is at the opening price of the previous day, right there. Firm resistance. In the pre-market, though, it broke from support, but turns out to be a false breakout. Pushed right back up to resistance. So, all right, same setup as that Tesla one. I'm thinking this is resistance. This is support. It opens here just at resistance. It breaks down from support. So now I'm thinking, hold on, is this still support now, or is it becoming resistance? After it breaks out, it retests and confirms, 2 candles confirm that it is resistance now. It's no longer support, it's resistance. So as soon as I got that one confirmation, I'm putting on the trade, getting in right in this candle. Stop loss just above the candle, right there. Target down here. And sure enough, it runs to the target, and I'm getting out. I probably got out too much because I think I hit the button too many times. Got too excited, probably. Should take off about 80% at your target or 90%, let the rest run if it wants to run.
Right. That's a pretty good risk reward there too.
Yeah, this one was okay. There's no real problem with this one.
Yeah. Sorry, that dotted line there, that's the previous day close, correct?
This one is previous day's low.
Sorry, on the 1-minute chart.
This one?
Just under 163.50.
Oh, this one. Yeah, this is previous day's close. That's right.
Previous day close. Okay.
Yeah. So that's a very, very, very significant level. Jared likes to say it's the king of all levels. So it is important. It has a lot of play. That's why I like to play these when I was playing these stocks. Play the ones that aren't gapping, that are in play. And those happen to be the big tech stocks, AMD, NVIDIA, Tesla, Amazon. Because what you can do with those when they're not gapping is that they are playing with the previous day's levels. They're in play. If it gapped up someplace, it's gone. It's somewhere else. You can't use previous day's levels. Then you're just chasing momentum or hunting for levels on a much longer time frame and doing all stuff like that. And then you're dealing with basically a big gapping catalyst stock, which what you can really only rely on is an ORB kind of trade. You don't know if it's going to give you much more than that.
Mhm.
So this works because these stocks, these big tech stocks, are pretty much always in play, and they are in play with previous day's levels. So you can really plan out your trades. And if you're doing options, they're very liquid, and it works.
All right.
So, these are a good simple way to do things without, trying to create a watch list every day and figure out why it should be in play and look at the news. I wasn't doing any of that. I'm still not doing any of that. I'm actually doing even less now. I'm just looking at the SPY.
Right. All right. Well, we're almost coming up to the end of our session. Can we take a look at the SPY and where the market is right now, and
Yeah.
give me your
Where's
thoughts on that?
what time is it? Wow. Oh yeah, the market opens in an hour. Wow, I didn't even think about it. Let's see. Where are we? Yep, still sitting at that high of 2 days ago. There it is. It's still just sitting there.
Mhm.
Doesn't really want to go anywhere. So let's see if this is actually a very interesting area. I like it. I'd love to see it in the opening session, the opening 1 or 2 hours, well, half an hour or 1 hour. Come down, maybe even below 506 on the 30-minute. Love to see a wick off 505, breakout to 506. I'll start getting interested for a long in this area and probably add more here if it truly is going. But if I'm getting long here, I'm getting some off here, and I'll buy them back if it's continuing. So a nice 30-minute ABCD pattern for the day would be the ideal scenario. The other scenario is it comes in here, it starts messing around in here, which I don't have a lot of conviction of the move here, but let's see what the price action tells us. It might just be a few opportunities to scalp it, in which case I don't think I want to trade. It is Friday too, so I mean, typically you don't get very clean moves, but you can be proven wrong at any time. That's kind of where I think it is right now. But that's just the technical analysis. Overall, based on the earnings from last night, I think there's a lot of potential for this thing to go up.
Right.
I think there will be a lot of selling up front just because of this overnight gap and
Profit
all
taking.
the lots of profit taking from the guys who have been holding this from like 450 or whatever, or even from low of yesterday. Profit taking, which will drop it ideally down here and give us that scenario we just described.
Right.
Yeah, that'll be really good. It'll be a nice day, nice way to end the week.
Right. Good.
Yeah.
When would you like to do the next seminar on this?
Let's see, we've had two, and boy, last time we spoke was a month ago. Let's see, we have today's Friday. Normally we talk on Thursdays, is that right?
Yes.
Okay. Yeah, we can lock in next Thursday if you like. Same time as today. Does that work for you?
Next Thursday. Yes.
3 p.m. for me. That is Eastern time, 7 a.m. on Thursday.
7 a.m. next Thursday.
Um,
Yeah, that's perfect. Perfect.
yeah. Okay, good. Good. All right, I'll send that to you, the calendar invite. And so between now and then, I think what'll be good for you is to, well, go ahead, set up the DOS stuff. You got the hotkeys. Start looking at these longer time frames, identify levels and scenarios. That'll be a good practice for you. Once you identify these scenarios before the market opens, then observe it when the market opens. See if it's playing out. Why is it playing out? Why is it not? What are the indications on the candlesticks, on the levels of liquidity? You can look at those things. And that'll get you moving on the technical front. On the mindset front, just kind of think about abundance and fear of missing out. And that's really irrelevant because the market is a gold mine. And just the more you observe the market, the more you try and look at it as millions of opportunities every other minute. Try and keep that in your mind. Maybe you want to write a note about that and keep it in front of your computer so it's always in your line of sight. It'll just keep reminding you that there's no need to go chasing stuff because there's an opportunity now. There'll be another one in the next 30-minute candle and in the next 10-minute candle. And there's just opportunities everywhere. Write it in your own words, where the market is a freaking gold mine and there's absolutely no need to chase.
I I've got a label maker, and I've put a couple of your quotes on my screen. I don't know if you saw it before, but I put
Okay.
unlimit your upside is one, manage your risk and profits will follow. and protect yourself by waiting for the perfect setup. So these things I got to look at and every day and remind myself every day, that 'cause this is true, right? Got to unlimit your
Absolutely.
upside.
Yeah, yeah, absolutely. It's amazing. It's just amazing. There's so much right at your fingertips. It's incredible. So take it easy with it and just build that mindset of just laying back and the mindset of abundance.
Right.
And it'll all just come together nice and smooth.
Yeah. Okay. Well, thank you for today. You'll send over the Zoom recording as well.
Yeah, I'll send you this recording right now, and I'll send you the calendar invite for next week. And also, did you get my message about the Discord channel, the Discord server?
No,
Let me,
I can't remember.
I'm gonna send that to you right now. This is a powerful thing that I just started yesterday. Here, it's in the chat. What you ought to do is that's the invite link. It's valid for I think an hour or so.
Okay.
Just click on it and join the group. This is the group of all my mentees and myself,
Yeah.
and we've done this thing. It's really interesting. We keep discussing all kinds of things. I'm probably going to go live in there now in the next 15-20 minutes, and
Right,
we'll be
cool.
live in the markets. So come and join us. It's great. And we'll be doing group mentoring sessions in there as well. So you can participate there.
That's
It's going to be
awesome.
really good. Yeah, just participate here. There's a lot of smart people with a lot of good information. So
Right.
you can,
How many mentees do you have, Avi?
uh, over time, I think 50 to 60, maybe 65 that I've mentored over the years.
Right. And how many do you currently mentor for?
Currently, say 9, 8 or 9, something like that. There's a bit of a turnover, every other week or so, every week. 8 or
Right.
9, which is it's quite a lot actually. A lot of my time's going into it. So we're kind of consolidating things, and a lot of people have been asking me about group sessions and being live in the market, so we can trade when the market's live and commentary when it's live. So that's why I've created this whole Discord group. And
Awesome.
this one's really fun. It's really exciting. We already are enjoying it, and there's different channels for different subject matters and stuff. So just
Right.
join it.
Okay. Yeah, I'll join that right now.
Yeah, fantastic. Yeah, great. So I'll see you in there in the next 30 minutes or so. That'll be great.
Yeah, perfect. Avi, thank you so much.
Sure, absolutely. It's a pleasure. Talk
Yeah,
to you soon.
my pleasure. Thank you very much. Bye.
Bye bye.